Hello guys, it's Max here from Daily Market Movements. Welcome to another episode where today we're going to be analyzing the S&P 500 followed by the Nasdaq100 and the DowJones30 futures charts on this Wednesday. Of course, we're halfway through a trading week already, and this week has been brutal. We continue to fall lower, and I'm pleased to announce that the market's done exactly what I anticipated it to do. I did say that we were currently in the process of forming this ABC correction, and that the likelihood of us going to test this 200-day EMA was highly likely, and that's exactly what happened during yesterday's trading session. We fell yesterday 1.5% here for the S&P 500, and we did in fact go and touch that 200-day EMA. Now, just quickly moving over to the Nasdaq100, this is the key. This is what made me think that this market had a lot further to fall, is because when I was filming yesterday, the Nasdaq100 was trading all the way at around 14,770, and I said that we are on the cusp of forming an ABC correction pattern here. But however, the Nasdaq100 hadn't pierced below the August 18th lows. Now, anyone who studied an ABC correction, you should know that the B to C leg has to break below the A to B leg lows. So in this case, that's the 18th of August, and we hadn't achieved that yesterday. So that made me think that the Nasdaq100 had further to fall. And the good news is that we've now gone and successfully completed that break below the August 18th lows, and that means that now, if the market was to continue to incline from here, the ABC correction the ABC formation would have successfully formed. So that's very important to understand. But just looking here at the S&P 500 team, we're at the 200-day EMA, and I think that the big question is, do we bounce from here or do we have further to fall? And I recognize that there is a major area of support at around 4,200. This is an area where we struggled to break above back in February, March, all the way through till at the beginning of May, really. So for a 3-month period, the S&P 500 really struggled to break above 4,200. And of course, on the NVIDIA's AI beat, that massive beat where they blew expectations out of the water. We then saw this follow-through movement where the S&P 500 just didn't look back, and we exploded towards the upside to go and hit our yearly high up at around 4,600. Now, part of me thinks that this area does need to be retested as the new support. So that could potentially offer a further decline here for the S&P 500 of approximately 1.5% down to 4,200. Also, what's very interesting is that we do have the 200-day moving average. So this is different from the EMA. This is the SMA, and that is currently trading at around 4,205. So that's very interesting indeed to see where that 200-day moving average is. And I think that could potentially be a magnet which sucks the S&P 500 lower towards that 4,200 mark. The question, though, is, do we bounce from here or do we go down to 4,200? And the honest answer is I don't know. All I can do is kind of support the evidence as to why we may potentially see a bounce here, but also kind of explain and support the risks of us falling potentially lower in the coming days. And I must say there are some real positive signs out there. Sentiment has now flipped from neutral to bearish as of yesterday. So the fear index is very high. That's something we hadn't seen dating back to the beginning of this year. We also have the mark indicator. This is an indicator that I use. It's very effective. And for the very first time this year, we are now having buy setups, which are about 1 to 2 days away. So they should form as of Friday, but they're also matching on the weekly and the daily chart. So that's very significant to understand. And as well as that, we're also about to get a perfect sell setup here for the 10-year bond yield, which obviously needs to decline in order for equities to rally, especially over in the Nasdaq100, where we do have a series of growth stocks. And as well as that, we also have a sell setup setting up. It should be on Friday if the market continues to trade high here for the dollar. So that's very attractive, the fact that we have perfect sell setups on both daily and weekly charts setting up now for the 10-year and the dollar markets, as well as having buy signals setting up for tomorrow/Friday here for the Nasdaq100 and the S&P 500. And then another thing is that also the S&P 500 is now oversold on the RSI with a reading of 30. So I do feel like the stars are starting to align here for a bounce, but of course I can't rule out if we were to fall down towards 4,200. But this is an area where I would be looking to accumulate. You can have a nibble here, and if we do fall down towards that 4,200, 500 area, that's potentially an area where you can start to pick up some more S&P 500, because I do think ultimately we do find a bounce here. I think what's very important to understand is that we are having a correction within an uptrend. If I just quickly draw this trend line for you here, we could potentially work our way towards the bottom of this uptrend, but it's important to reference that we are still in an uptrend, creating a series of higher highs and higher lows. Yes, we are towards the bottom end of this uptrend, but we're still within the uptrend. So technically speaking, there hasn't been anything significant broken as of yet. I think that that's some good evidence as to why you may want to consider buying some of the S&P 500 here, just nibbling, dollar cost averaging down. And if we get to 4,200, fantastic. It just offers a better price. Moving over here to the Nasdaq100, very similar to the S&P 500, but the only difference is that we are still significantly higher off that 200-day EMA. If we were to go and test that 200-day EMA, that would be a 3.5% fall. So ouch, right? That's still quite a long way to fall. But the good news is that I don't think that we will get that low. I think that we will find support here at the 0.618 fib area. This is something I've been saying for the past couple of trading sessions. But very similar to the S&P 500, we're still trading within this uptrend, but the only difference is that we're pretty much at that uptrend line now. You just readjust that line. There we go. We're pretty much testing it now. So that's what makes me think that we don't go and test a 200-day EMA, because if we were, that would then indicate that we've broken this uptrend that's been forming pretty much since the start of this year back in January. So I do like the Nasdaq100 here. I think if we did fall down towards 14,350, that would offer a fantastic buying opportunity. And then last but not least, moving over to the DowJones30, technically this chart does not look pretty. We've just broken below the 200-day EMA. Next area of support sits all the way down at 32,800, which is a 0.5 fib area. What I don't like, guys, is that we have broken this uptrend. But, if I was to look at this trend-based fib extension, what does it tell me? It tells me that we're pretty much there. We've kind of hit this full extension of decline. So there could be support here at 33,458. So that's something that I'm looking for, whether we do see buyers step back in around this current price area and send us back above the 200-day EMA. If we can get a close above the 200-day EMA, so at approximately 34,000, this is an area where I would be looking to accumulate the Dow Jones 30 for it to trade back up towards the swing highs. But until we see a move back up above the 200-day EMA, I'm not interested in participating in this market. So yeah, just to kind of conclude for today's video, guys, yes, the damage has been brutal in the month of August and September, especially this past couple of weeks. In the past 2 weeks, we've fallen 5% here for the S&P 500. So we're in a minor correction here. And then also for the Nasdaq100, in terms of percentage points, we're down nearly 7% in 2 weeks. So it does feel like a bloodbath, but you have to take things into perspective. For the year so far, we are still up significantly here for the Nasdaq100, up around 35%, which is larger than most other years. And then here for the S&P 500, we are still up 11 or basically 12%. So I think you have to look at the bigger picture. If in doubt, zoom out and see and recognize that we are still up significantly for the year. And I do believe there will be some fantastic buying opportunities within the next couple of days and weeks ahead going into year end, because of course next Monday is the beginning of Q4, and that's when I really do anticipate buyers to step back into this market and to support higher prices as we go and target those swing highs. But that's going to wrap it up for today's video, guys. Make sure if you would like to join my free trading signal group that you scan this QR code on your screen. It will take you to my website where you can sign up. It's free to join for 1 month. After 1 month, you will be charged $29.99. But if you don't enjoy the service, you can cancel at any time, and there's no catches. You won't be charged if you cancel. So make sure you scan that QR code, and I look forward to welcoming you all over onto my Telegram group chat.